Hey everyone, welcome back to Swing Fit Wealth, where we talk about golf lifestyle, fitness, and income investing. Today we're talking about passive income and how to play golf, unlimited golf with passive income. So let's get into it. This is what we got today. This is a fund from Roundhill called WPAY. We're going to give you a breakdown, talk about the distribution rate, a little bit more about the fund itself, performance, taxes, some cons, and then some free golf math, which is what you want to stick around to the end to. So here we go. So this is a fund from Roundhill Investments. If you're not familiar with them, you could do some research. There's a lot that I can't cover in a short video here, but this fund is a fund of funds, meaning that it holds equal weights of all their other weekly pay ETFs. And you could see, let's see if we click all. Yeah, you could see all of them right here. So this is a fund of funds. Like I said, all these other ones are on individual companies or ticker symbols. Back up to the top here. This is a weekly pay, which they do on Wednesdays, I believe. Diversification, like I said, to all the other Roundhill funds, weekly pay funds. And then they do a rebalancing every month on this guy. Some other stuff to note is we have the net expense ratio around 1%, which is high in the traditional sense, but this thing pays out a good amount, which you could see right here. Here's the current distribution rate, 57.5%. So that's why I don't really mind so much on the 1% expense ratio like a lot of people probably do. And then we got the assets under management, AUM, a little over 500 million. We talked about the holdings. And let's get back to the sheet here. So that's the breakdown. Dividends are paid weekly on Wednesdays. Distribution rate, I put this sheet together yesterday. So that's actually gone up to 57% from 54%, which is going to screw my numbers up at the end. We talked about this. It offers a diversified exposure to the entire suite of their weekly pay ETFs, and it is rebalanced on a monthly basis. So let's get into the performance. We're going to get over to Yahoo Finance here. So looking at the performance here, we'll go 6 months out, a year to date maybe. You can see it's up 3.31% year to date. That's what I'm looking for at a bare minimum with these high yielding funds, is the steady NAV. Anyone that's in the high yield space talks about NAV erosion. It's a buzzword for a good reason. But this guy has been pretty stable with those high payments that it's been spitting out, which we'll look into that a little bit more too. But so that's the performance on Yahoo Finance. We talked about the assets under management, the expense ratio. The management style is passive. This is not an actively traded fund, actively managed fund, which you could dig into more about that. I believe it has to do with this company here, this Selective, is who runs the fund or manages it. I'd have to look into that myself as well, but so that's the management style. Next, let's get into the dividend history, courtesy of Seeking Alpha. So this has only been around since September, but you could see the payouts here: 54 cents, 51, 88. So it's been steady. You could say even increasing slightly, although it has come down the last few weeks. But nothing too crazy, but also not a lot of history there, obviously. So that's the dividends. Next, we'll get into the taxes. So I'm not a financial advisor. I'm not a tax advisor. All of this is for educational purposes only. But from what I understand, so this is obviously taxed as ordinary income. But per the latest 19A1 notice and me talking with Grok, 100% of the distributions are being taxed as return of capital, which means you are not paying taxes on the distribution. Just if you were to sell the shares for a capital gain. So someone correct me in the comments if that's not accurate, but that, from my research, is what's going on with the taxes on this fund. Next are one of the cons is the diversification. So it is diversified in regard to how it holds these different weekly paying funds. But you'll notice that most of these funds, Microsoft, Google, Apple, Nvidia, AMD, these are all funds, these are all tech stocks. So it is heavily focused in that tech space, which doesn't really make it too diversified, if you ask me. I mean, I still love this fund, don't get me wrong, but that is definitely a con. All right, let's talk about the free golf math. So that's kind of our whole thing here is how much do you have to invest into these types of funds to play a free round of golf every month for as long as you are walking around on this earth. So there's two ways to do it. You can do a lump sum, or you can slowly build it up with a dollar cost average DCA style method. So let's talk about the lump sum first. So $10,000 into this at once at the 54% distribution rate, which is what it was yesterday. It's actually up a little bit, but that would put you up at around $5,500, or obviously this stuff's going to fluctuate throughout the year, but you get the point. It's around $5,500, which is around $450 a month or $114 a week. So $10,000 into this guy is going to be, that's a free round of golf every week if you wanted to go that route. Now, like I said, this is assuming that the price is staying the same and the distribution rate is staying the same. So there's two constants, which obviously is unrealistic, but this is just to give you an idea of what it would look like. So if you went the DCA route and you just did $8 per trading day, that's kind of what we teach in our Skool group is start small, $8 a day. That's all you need. There's 252 trading days a year. So if you just stay consistent, and obviously if these two constants were the same, then after 12 months of reinvesting the dividends, you would have about $154 a month coming in under that scenario right there, which, depending on where you are in the country, is probably around about 2 free rounds of golf, maybe 3. So that's pretty cool. So that is what I got for you on WPAY. Now, obviously, investing into these high yield funds is not something you want to do blindly. So we do have a Skool group that we are setting up with a bunch of like-minded golfers. It's called Swing Fit Wealth. You could catch that link in the bio below, maybe in a pinned comment. It'll be somewhere below. You can get a link to our Skool community. It's free to join as well. And also, I have a free PDF that you can grab. It's going to give a bigger breakdown of our whole process and how we like to invest. So you can grab that PDF for free as well. I'll leave that link down below. But that's all I got for you guys. And the whole goal is to play free golf and to fund your golf lifestyle with passive income. So come join our Skool community. We'd love to have you in there.